Welcome. Today, I am tackling a challenge that every crypto investor faces: how to avoid costly mistakes in the fast-moving world of cryptocurrency. Whether you're just starting out or you've already dipped your toes in the market, it's easy to get swept up in the excitement and overlook some important details. The crypto space is full of opportunities, but it's also packed with risks. In this video, I'll break down the top tips to help you steer clear of common pitfalls, protect your investments, and make smarter decisions. Let's get started. First, let's talk about why crypto is so exciting and so risky. Cryptocurrencies like Bitcoin and Ethereum have made headlines for their wild price swings. One day, prices can skyrocket, and the next, they can crash just as quickly. This volatility means there's a chance to make money, but also a real risk of losing it just as fast. The crypto market never sleeps, and prices can change at any hour, making it different from the stock market you might have heard about in school. But volatility isn't the only challenge. Scams are everywhere in crypto. Because it's a new and sometimes confusing space, scammers take advantage of people who don't fully understand what they're getting into. There are fake coins, phishing attacks, and even fake exchanges that can steal your money if you're not careful. And finally, there's the problem of not knowing enough. Many people jump into crypto without really understanding what they're investing in. They hear about someone making a lot of money and want to get in on the action, but they don't take the time to learn the basics. This can lead to big mistakes that are totally avoidable. So, let's start with the most common mistake: failing to do your homework. If you invest in a cryptocurrency just because someone online said it's going to moon, you're honestly taking a huge risk. Every crypto project is different. Some have strong teams and real-world uses, while others are just hype with no real value. Before you invest, ask yourself, what problem does this cryptocurrency solve? Who is the team behind it? Do they have a good track record? Is there a real community supporting it? Are there any red flags, like promises of guaranteed returns? Doing your own research, often called DIY in the crypto world, can totally save you from making costly mistakes. Don't just rely on what you see on social media or hear from friends. Look for official websites, read the project's white paper, and check out independent reviews. Another big mistake is not knowing the difference between investing and trading. Investing is about buying and holding assets you believe will grow in value over time. Trading is about making quick moves to profit from short-term price changes. If you say you're investing, but keep checking prices every hour and panic selling at the first dip, you're probably trading without realizing it. Trading can be exciting, but it's also stressful and risky, especially if you don't have experience. If you're just starting out, focus on learning the basics of investing first. Build a strong foundation before you try to time the market or make fast trades. Crypto markets are emotional roller coasters. Prices can rise or fall by double digits in a single day. It's easy to let fear or greed drive your decisions. For example, you might see a coin going up fast and feel like you're missing out. This is called FOMO, or fear of missing out. Or You might panic and sell everything when prices drop, only to see them recover later. So, the key is to have a plan and really stick to it. Decide in advance how much you're willing to invest. And don't let your emotions push you into making rash decisions. Remember, it's honestly better to miss out on one opportunity than to lose your hard-earned money chasing hype. Security is like a huge issue in crypto. Unlike a bank, there's no customer service you can call if your crypto gets stolen. If you lose your password or fall for a scam, well, your money's just gone for good. So, here's how to protect yourself. Use reputable exchanges with strong security records. Make sure to enable two-factor authentication on your accounts. Don't ever share your private keys or recovery phrases with anyone. And honestly, consider using a hardware wallet. That's a special device that stores your crypto offline, keeping it safe from hackers. Taking these steps might seem like a hassle, but honestly, it's much better than losing everything to a hacker or scammer. Crypto can be tempting, especially when you hear stories of people making huge profits overnight. But it's important to remember that prices can go down just as quickly as they go up. Never invest money you can't afford to lose. This is especially true for students or anyone just starting out. Your education and basic needs should always come first. If you want to get involved in crypto, start small. Use it as a learning experience. As you gain more knowledge and confidence, you can consider investing more. But always keep your risk in check. Scams are everywhere in crypto. Some common ones include fake giveaways, where scammers pretend to be famous people or companies and promise to double your money if you send them crypto. This is always a scam. Then there are pump and dump schemes. Groups hype up a coin to drive up the price, then sell all their coins and leave others with losses. And phishing attacks. Fake websites or emails trying to steal your login details or private keys. Always double-check website URLs. Be skeptical of offers that sound too good to be true, and never share your private information. Crypto isn't a free-for-all. In many countries, you have to pay taxes on your gains, just like with stocks. If you ignore the rules, you could end up with a big tax bill, or even legal trouble. Make sure you know the laws in your country and keep records of your transactions. So, let's look at a real-life example. Imagine, an investor who hears about this new crypto project that's getting a ton of hype online. Without doing any research at all, they just put in a large amount of money. At first, the price goes up, but soon after, the project is exposed as a scam and the price totally crashes. The investor ends up losing most of their money. Now, compare that to someone who actually takes the time to research before investing. They look into the project, check out the team's background, and read independent reviews. They decide to invest a smaller amount and keep most of their funds in, safer assets. When the market turns, they're able to avoid big losses and even make some gains. The lesson? Taking your time and being cautious really pays off. So, if you're a student, or maybe just getting started with crypto, here are some extra tips for you. First off, start small and really focus on learning as much as you can. Don't let FOMO or peer pressure push you into making decisions that don't feel right for you. It's super important to build your knowledge. Read up, watch videos, and join some online communities where you can ask questions and learn from others. Try out simple strategies at first, like holding onto your coins or maybe even scalping, before you jump into more complex things like staking or using DeFi platforms. And honestly, you don't have to invest in crypto just because everyone else is doing it. Everyone's financial journey is unique. As you start to feel more comfortable, you might want to check out some advanced strategies like staking, yield farming, or even trading NFTs. These can definitely offer higher rewards, but they also come with higher risks. Really, you should only try these once you've mastered the basics and you fully understand the risks involved. Crypto prices are well influenced by a bunch of big picture trends, like global events, regulations, and changes in the economy. For example, if a country decides to ban crypto trading, prices might take a hit and drop. On the other hand, if a new technology or a narrative, like AI coins or meme coins, suddenly gets popular, prices can spike pretty fast. So, staying informed about these trends can really help you make better decisions in the long run. But remember, just because something is trending doesn't mean it's a good investment. Always do your own research and, don't chase every new fad. Alright, let's recap the top tips to avoid costly crypto mistakes. First, always do your research before investing. Make sure you know the difference between investing and trading. Don't let your emotions control your decisions. Seriously, prioritize security. Only invest what you can actually afford to lose. Be super careful and watch out for scams and hype. Also, make sure you understand the legal and tax rules, and most importantly, just keep learning. Crypto can definitely be a great way to learn about finance and technology, but it's not, a guaranteed way to get rich. By staying careful and informed, you can avoid the most common mistakes and really set yourself up for success. Crypto isn't just about coins, it's about choices. And honestly, the smarter your choices, the stronger your future. Hey, leave a comment below and share your biggest lesson in crypto, good or bad. Like this video if you learned something new. Subscribe for more honest crypto insights. And don't forget to hit that bell so you don't miss the next one.